Hey, good afternoon, everybody. Bob Trade Genius. The afternoon of the 21st of April. Happy Easter to all. And what I want to talk about here is the thing that I'd be most likely to go short. The market starts to roll over is real estate, and so I would be looking to buy puts on URE. And I just wanted to just show you here the stock market went down, 40 some percent in 2008, 2009, but the ultra ETF for real estate went down uh, over 90%. And this is an area that's vulnerable for demographic reasons and for just the basically the secular nature of what's happening in the commercial space, with the Amazons and the onlines of the world, and then also just the economic stress of of real estate, which is kind of a sticky asset, and the and people's inability to afford the payments. And so, I just want to show you the monthly here, just to show you how it falls off the edge here, and then I'm going to go down to a daily here and show you. And so, what caught my attention this time was look, the steep fall off that we had here, with just a small rise in the rates, and we had a pretty decent move here, which was between basically 70 to 50, which is a pretty decent move down in an environment that's supposed to be relatively benign. And so this kind of caught my attention. We got a moneymaker buy on this. You don't take that when these stokes are about ready to break this embedded area. So it's something just to keep an eye on. I think it's going to break down from here, and I may catch it, and if we may get another bounce up, rates may go down again. But what I'm mostly interested in watching is right here. I'm going to put a ratio chart up against TNX. Okay, this is the 10-year. Oops, sorry. I'm not going to have any idea what I'm talking about. Here we go. Oops. Sorry about that. URE, TNX. And so what's happening here, which is really interesting to me, is that it's starting to lose its sensitivity to rates. In the past here, every time the rates would fall, real estate was going to get a bounce. And so, and this was the bounce coming out of the end of the year crash, and then there was a bounce here in March with rates, and now it's going to try to bounce again. We had a small dip in rates on Friday, but what I'm watching here is I'm watching a failure of this ratio. And if we get another sell signal in this ratio, then it'd be a good place to put puts on for URE, and may also portend more difficult times coming. So just want to share that with you guys. Something to keep an eye on, and I think it's a pretty safe way to short the market. I never go long ultras. So you buy puts when it's at the top of its channel or its range, and that way you're getting them at a decent price, and you have to go out far enough to take advantage of it. Probably go out 60 days at a time and see if you can make a good move. The banks will also be pretty good too, but I think they're going to shove so much liquidity at the banks, it'll make your head spin. But there's no reason for people to buy real estate, so just bear that in mind. Anyway, you guys have a good day. I'll catch you during the week, and leave your comments below, or if you're a subscriber, we'll see you in our chat rooms. Bye-bye.